Okay, good morning. Welcome to Stock Market Today for Wednesday, August 12th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. As always, you can find me on Twitter. I'm at Dan Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show. Also gives you daily stock ideas to consider, and then hits your inbox every trading day before the market opens. So let's dive in. U.S. equities were lower in Tuesday's trading, finishing just off the worst levels of the day, with the weakness being attributed to the stalemate in Washington over the next round of stimulus. Growth lagged value again as extreme positioning in the former continues to unwind. Financials and industrials were your outperforming sector, while the bond proxies lagged largely due to a backup in yield as treasuries were weaker with the curve steepening. Dollar was stronger against the yen, but little change on the euro cross. Gold was down 4.6%. Crude oil closed lower by about 70 basis points, reversing earlier gains. So selling winners continues to be a theme with gold and silver coming under pressure, but I think that presents an opportunity that we'll address a little bit later on in the show. As we get to the desk here this morning, futures are up 90 basis points after Asian markets were mixed overnight. Hong Kong, Japan, and South Korea were higher, while China, Australia, and Taiwan lagged. European markets are mostly higher. Treasuries are unchanged to slightly stronger at the front end of the curve following that backup in rates yesterday. The dollar is stronger on the yen cross, but weaker against the euro. Gold is down 0.5%. After that hit yesterday. WTI crude is up 1.5% to kick us off on a Wednesday that sees a pullback from the resistance zone as our starting point. Here's your, I'm not marking it. I don't want to kind of mark up the charts too much, but you can see the big gap that started here with the start of the downturn in February and March, just below those highs that we've been talking about, right? So hit the resistance zone, pull back a little bit. Pull back from the resistance zone. Now, where is support? Support's 3150 to 3250. Might even be able to inch it up closer to 3300 soon, but not quite yet. Below that 3000 psychologically important round number, you can see the 50-day moving average is within that initial support zone, and the 200-day moving average is just above that 3,000 mark. Now, resistance, we hit the zone yesterday. We were above 3350 and then faded. So call 3350 to 3400 your resistance zone here in the near term, largely encompassing those February highs. Now, we do remain overbought based on the 13-period CCI, and that lines up with an overbought condition on our overbought oversold indicator that we use on our charts. And Chaikin money flow, however, is still strongly bullish. You can see it recently got up to its highs over the past 12 months before pulling back yesterday as equities closed near the lows of the day. So really not a ton has changed here. The path of least resistance in our mind is up. The February highs remain in play. We can quibble over whether or not they've been reached. But largely speaking, from a strategic standpoint, nothing's changed. I think what you want to look for is pullbacks that produce an oversold position above support to become aggressive on the long side of the portfolio. That's the framework that I'm using here in the days and weeks ahead. Now, let's talk about our market in a minute. The key points that we are highlighting today are, stimulus, stalemate, right? Some commentary yesterday from McConnell about not reaching a deal in the near term. I think that weighed on sentiment more than anything else on the day. Some people are pointing to some high-profile cancellations of college football as signs of the virus is still with us. I think we all know that. Me personally, I give that one less credence. I think the biggest risk right now to equities is a lack of stimulus. Major ETFs remain overbought in the near term. We talk about that in our note. Not really going to go into it here. I touched on it for the S&P 500. Pullback in gold presents an opportunity in the miners. We will look at that a little bit later on in the show. Sentiment is still more greedy than fearful. It's Wednesday. We do our sentiment work, and the persistence with which options traders have remained bullish is astonishing. Sentiment's a poor timing tool. I'll talk about it, but I think it's more of a framework that you should have in the back of your mind. As I said, futures do point to a higher open here today. Taking a look at the major indices now from a power bar perspective, they're still strongly bullish. The Dow lost 37 basis points yesterday, 8-3 bulls to bears. S&P 500 down 80 bips, 159 to 59 bulls to bears there. The NASDAQ continues to underperform. I think we're still seeing an unwind of some of those crowded trades in the growth stocks, the momentum names, the big large cap leaders, some position squaring. Looks like it's taking place. It's been taking place for a few weeks. And it continues to play out. However, look at that ratio, 34-6 bulls to bears. Small cap slight outperformer on the day, i.e. down less than the overall market, 743 to 246, solid ratio there. Bonds, big move lower, especially at the back end, sending yields higher, which helped the financials, especially with the curve steepening. Fins were one of your better performing sectors yesterday, up 1.16%, 27-4 bulls to bears there. So I said we were going to talk about gold and it presenting opportunities. I think we have one here in Kirkland Lake, or we have one setting up. KL, the ticker symbol here, down 6% yesterday. Very bullish stock, strong trend, strong industry group we can see. We know the metals and mining group is strong, and the trend here is positive as the stock is above the rising long-term trend line. Solidly bullish money flow, outperforming the market. Overbought, oversold indicator moving towards an oversold position. So I think that there were people, if you feel like you missed the rally in gold and you say you've been telling yourself you're waiting for a pullback, here it is. We'll look at it in the context of the miners because I think the setup there is slightly better than in a product like GLD at this point. But here it is. This is the pullback you've been looking for. Put the pullback in context. It is a pullback within the context of an uptrend. That's your opportunity, in my opinion, right? With a risk management, obviously, playing a part in your process. But take a look at KL as a bullish stock today. On the sector tracker, movement of the major sectors over the last 5 days of trading. Industrials, remember we highlighted them yesterday, following up with the materials. As we look at some of the rotation that's playing out, we're not just going to ignore it, right? We're still in the growth camp, but we have to be mindful of near-term rotation. And if exposure is in fact shifting, getting on the right side of it, right? So we started talking about materials, and now we're talking about industrials. Both of those groups higher over the last 5 days. Financials have had a nice move here. I'm not there yet. Same with energy. Discretionary also bullish. Comms and staples are middle of the road. Healthcare, we talked about the breakdown on a relative basis yesterday. REITs and utilities, those are your bond proxies. As rates backed up yesterday, they came under pressure, and tech is succumbing to rotation in the near term. And I still just think it's unwinding of extreme positioning. If I'm proven wrong, obviously I'll change that view, but that's my stance right now, and I'm sticking to it. Turning to our industry in focus, it's mining services, which over the past 6 months has been a slight underperformer, actually, lagging the S&P by about 1.5%. However, the power bar ratio is very strong, 10 bulls to 2 bears. Ranks at number 8 of 21 subsectors, and it's moved up 3 slots over the past week. So if you're looking for a pullback in some of these metals names, take a look at some of the names that are holdings within XME, like Reliance, RS, Steel Dynamics, STLD, and Schnitzer, SCHN, all with very bullish Chaikin power gauge ratings for you to take a look at. And take a look at the fund here. Bullish ETF rating, 10-2 on the ratio, strong trend above the trend line. The fund itself is still probably a little extended in the near term. This is a compilation of all metals and mining. We'll take a look at GDX a little bit later on. But what's compelling to me is the shift in relative strength to go along with the bullish rating and the continued accumulation here, as we can see from Chaikin money flow. So I think you want to look for opportunities. If you're looking for opportunities to participate in potentially rising inflation, I think you may start to see them here within the equity market. So something to keep in mind. Let's hit what's trending now. Yesterday's S&P 500 gainers and losers. A win continues to move higher on China travel news. Same goes for Las Vegas Sands. Seems a little bit of a easing of restrictions on travel in China, lending a bid to these names that have exposure to Macau. ALB didn't see anything company specific to drive that stock higher by 6% on the day. CTVA caught an upgrade on the 10th. So that was on Monday. Nothing company specific to drive trading there yesterday. Maybe potential some follow through. Maybe people kind of reading the upgrade note and the thesis is resonating. up 5.3%. Silicon Valley Bank, SIVB, up 5.3%. Nothing company specific there, but we did note that the financials, especially the banks, had a nice day yesterday. On the loser side of the board, a cautious article in the Wall Street Journal on Oxy's deal for Anadarko sends that stock lower by 8%. Newmont, nothing company specific. Gold was under pressure yesterday. So Newmont, one of the bigger names there, down 7.4%. AMD, I think it's a case of just profit taking in some of the winners. Down 6.5%. Clorox loses 4.75% as consumer products names were under pressure. Take-Two, nothing company specific there, down 4.3% for a stock with a very bullish Chaikin power gauge rating. So let's dive into the charts now. Sentiment is still greedy. And this is arguably one of the more persistent themes that I've seen in a long time. I mean, this is 5 years of data showing the 13-day moving average of the CBOE equity options put call ratio. You don't hang out in these excessive positions for all that long, usually. At least we haven't in the past 5 years, right? Normally it's a quick hit. Now, again, poor timing tool. I think of sentiment the same way I think of valuation. It's an environment. If we think about what's the environment, well, investors are more greedy than fearful. Is that a reason to run out and sell stocks? No. However, it is a reason to pay attention if you start to see a reversal, if you start to see key levels break, understand that people are not protected, right? So there could be an acceleration to the downside. It's almost like a divergence. It's a wake-up call. You should be paying attention to this. You should be managing your risk. Stay heads up out there. Same with valuation. Stocks can remain expensive or cheap for a long time. It's an environment. You can see the VIX continuing to move lower from the extremes, now well back below the levels that have marked peaks over the past 5 years, notwithstanding the big spike back in March when we topped out in the mid 80s. So the VIX normalizing, not quite back at a level that would say, hey, this is extreme to the complacency side, but continues to normalize within the context of this being excessively greedy. So just something to keep in mind in the back of your head as you're managing risk, as your levels are being hit that tell you to manage risk. Keep in mind, you want to honor them. You always want to honor them, but remember that you have this as a backdrop as well. Sentiment is greedy. People are not protected. That's kind of the takeaway here. In my note, I look at positioning of large and small speculators in the S&P 500 futures products, and we're back there essentially flat on a net basis from extremely short all throughout the spring and early parts of the summer. So that's an interesting dynamic as well. Whereas people were overly short, now they're kind of net flat. So something to keep in mind as you're running through your process here every day. I said we talk about the opportunity in the gold miners, and I kind of want to frame up what that looks like within the context of a trend in the near term. So this is a newer chart for me that I'm paying attention to, but I think it kind of paints the picture here. It's the GDX, the Van Eck Vectors Gold Miners ETF. We are using a 10-period Bollinger Band with the band set 2 standard deviations above and below a 10-period moving average. That's the dashed line here. So we think about that as kind of what's been what's kind of the range by taking volatility into account. And then what's the trend? And the trend here, this is a great tool. I'm using the linear regression slope, 21-day linear regression slope. Right? So if it's above 0, the trend is arguably up. If it's below 0, the trend is arguably down. Now, it is a little bit of a shorter term time frame, but it fits in within the context here. So what's interesting to me is we've now pushed the lower bound of the band while still in an uptrend. So to me, that's where the opportunity arises. You can kind of get a framework for where are you within the existing trend, right? You were overbought here within the uptrend, and then you pulled back. And you want to look for opportunities to add bullish positions when you're kind of near the lower bound while still in an uptrend. And I think that makes sense here. Is it immediate? No. Could we stall out still for a little while? Yes, but I think the risk reward in the near term is compelling in GDX. And the same goes for the long-term treasuries. Take a look at TLT on the same basis. That slope is above 0, so we are in an uptrend. and push through the lower band. So I think that that's interesting. That'll wrap us for today. Take us for a test drive, chaikinanalytics.com/test drive. I'll be back with you tomorrow.